Should be on YouTube, should be on the VTF, and I'm just gonna get started. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here is the position disclosure. And with that said, let's get started. What's Fubo doing on its earnings report, actually? I'm curious. Trading up. Wow, it's trading up to $8.20. Oh man, looks like their numbers are a decent beat. Look at talk about a daily chart. Is this the last earnings report right here? November 10th? I think it is. Going into the last earnings report, they were trading at $33. Now they're having this big after-hours rally to 8. All right, but let's talk about the elephant in the room. Or should I say the bear in the room? Ha ha ha. That was a bad joke. Market closing down 1% 3/4 for the S&P. NASDAQ off 2.4%. IWM off 1.73%. And that doesn't even, those percentages don't even fully do justice on the selling, because we actually had a decent gap up this morning for the indices. It was a common gap higher this morning, which, you know, technically is shortable. Forget what percentage. It was a big gap up too. What did we gap up? Like 1%? So if the NASDAQ's down 2.5%, it's really like a 3.5% down move. You guys can hear me, right? Jonathan says he's getting no sound. Jerry's getting no audio. No audio from anybody. It's bizarre. Test. Ugh. All right, give me 1 second here. For once, the YouTube is working, but the VTF is not. Who would have thought? Putin got me is the last comment I'm seeing. All right, give me a second here. I'm gonna log off and log back on the virtual trading floor. One of these days, my technology situation will go fully smoothly. Fully smoothly. Whew. That was ice falling off the roof again. So it was a little startling. My dashboard, virtual trading floor, ProDesk VTF, access now, log in, back into the room. Needs a second to load, connecting audio, going for the screen share. Bam. All right. Can you guys hear me now? Test. All right. I guess that was on my end this time. Okay. Let's get back at it. So I was talking about, I'll just repeat myself. So we're talking about the bad joke I made was the elephant in the room. Really, it should be the bear in the room, right? You know, SPY's closing down 1.7%. Q's down, 2.4%. We actually already rallied $1 off lows. IWM down 1.7% right now, and also has a nice 50-cent rally here off lows so far since the market actually closed. And what I was saying was that doesn't even actually do, those percentages don't do the down move justice, because we actually had a pretty big common gap to the upside. I forget the exact percentages, but I think we gapped up like a percentage point in the NASDAQ. So that's actually about 3.5% of just pure selling today. And there was almost barely a single bounce at all today. The only bounce we had, and it was a good bounce too, it was an interesting bounce, was here. Around 11:15 or so, we bottomed out, and we rallied. I just got the SPYs up right now. We were able to rally from 426.60 all the way to 430.25. So it's like a solid, almost $4 bounce there, midday in the SPYs. And at this point, I was making jokes. I was making jokes to Pat when he came onto the VTF in the middle of the day. about it, the fact that it was an inside day. Like, and to me at this point, honestly, after this rally, I thought we were going to have an inside day, and it would have made sense to me because of our downside extension even coming into today's trading session. You know, this is all within yesterday's range. It felt like a huge move, right? We gapped up really big. We sold straight off here till 11:15. Then we finally had this rally. These were big moves. And I thought we were going to end up having an inside day. And then we started to break down. And it was honestly right here at 12:55 that I could kind of tell that something wasn't right. And I know Josh gave everybody a great risk management warning almost at about that same time. He basically said, if lows break, look out, get out of the way. And that was a really good piece of advice to throw out there for the team, because he was right. Once those lows broke of the open, that was the catalyst that broke yesterday's low. And then once yesterday's low broke, I mean, this down move here was pretty ruthless. The really scary part about the down move is not only was it ruthless, it was orderly. You want things to be getting crazy and getting panicky when you're down this much and the market's this extended on the daily chart, which is why I said into the close, and I still want to analyze that common gap up and kind of our opening game plan this morning, which is why I said into the close here, like, as extended as we are and as brutally bearish as this is, and as much as this is now the fourth or arguably fifth day down, if you want to include the futures market here in a row, and they're all sizable down days, and we are now extended, you know, SPYs are at 422 with the ADMA at 435, so we're extended by, $13 from that lower band of equilibrium in the SPYs. As much as all of that is the case, the way that this sell-off is orderly, the way that this volume hasn't even picked up yet, we could really be in for another day or two of real downside price action here, despite the degree of extension. And the thing I referenced was, again, as extended as we are, and we certainly are extended to the downside. I'm not advocating putting in new shorts in a market that's extended. It's not how I kind of play this game. I don't like buying markets that are extended to the upside. I don't like shorting markets that are extended to the downside. But there's degrees to this, right? And as extended as we are, we're not that extended compared to our absolute lows that we saw here in January. And this, by the way, is more of what the price action should begin to look like when you start seeing some sort of bottom or some sort of rally or something like that. You could see here that on this day here, the volume really began to pick up the day before the low in January. And then the volume absolutely maximized in a huge way on the bottom day, which is January 24th. And you can see prior to that, like the 3 days here where, we were selling off really heavy, but this volume wasn't magnificent. It's kind of similar to here. We got these 4 selling off days in a row here, but that volume really hasn't picked up in such a way that can give us some sort of signal that some sort of bottom should be coming. And talking about degrees of extension, I just said that we're $13 extended to the downside in the SPYs right now. Well, at this absolute low, the absolute low here in the SPYs was just under 421. The ADMA at that time was at 451. We were extended by $30 at our absolute, and this day was bonkers. I'm sure you guys remember that. But we were extended by $30 by the time the bounce actually came. If, and I'm not saying that we will, but if we see something similar to that repeating itself here, then that would probably mean that tomorrow is the first day where the volume picks up. Tomorrow is, Thursday? And that maybe on Friday you see some sort of bottoming action kind of come in. But to get the market, $30 extended to the downside, keeping in mind that this ADMA keeps going lower, you're probably looking at another $20 to see the same degree of extension currently as we saw here. You're probably looking at another $20-$25 of downside price action to get that degree of extension. Get us down to $400 or so in the SPYs. Which again, this degree of extension, it's worth repeating, is an anomaly. You usually are not going to see the index, the S&P. You might see it in individual stocks, but you're usually not going to see the index, which is a $420 index right now, get extended by, you know, $30. Like, you might see a stock that gets extended by, you know, more than 5% or approaching 10%. You don't really ever see that in the indices. So that's kind of where we're at, and it's definitely scary. And today was just a straight up negative Maribozu also. So there are a lot of things here that are pointing to us potentially being able to continue down. But we are extended to the downside, and there are some things to pay attention to. So, you know, I wouldn't want to just come in and short. You know, if we open up flat tomorrow, I wouldn't want to just come in and short that. Maybe if we gapped up. And that was kind of the situation today, right? So today, this morning, we had a common gap to the upside. And it's a common gap in a bearish market. So I did, you know, let everybody on the team know that the good book of technical analysis says that in a common gap to the upside in a bear market, that's something that you want to short. And I, as much as I believe that that is, you know, the truism there, didn't want to do that right off the open. I didn't want to do that right away. And the reason why is because I felt that the market was actually extended when we were opening. Again, this ADMA has worked its way a little bit lower today, but we opened up, you know, 432 and change. I think the ADMA at that time was like 437 or so. So we were like extended to the downside by like $5 as we opened, and today, and it was after 3 downside days. I was more interested in shorting a deeper bounce than we actually were able to get with the gap up. I wanted, you know, we've all seen kind of those opening rallies kind of come into play, that it's like a little bit of a relief rally. Like if we could have opened up the way we did, caught some upside price action, maybe got above yesterday's high and started getting up to like the area between 437 and 440, that's where I would have looked for shorts. So that was wrong. Should have been more aggressive for it. And there were some opportunities to do some intraday short execution, particularly into this down move here. But I wouldn't want to be, again, personally shorting, you know, even 425 and thinking that it's going to be a real swing trade for me. You know, maybe just a day trade off a couple of those bear flag type patterns that we called out as the market itself is actually breaking down. Oh boy, excuse me. It seemed like this market really wanted to hold up this morning too. You know, when we first had that common gap to the upside, I was saying you can't come in and buy because it's a common gap to the upside in a bear market. But I felt that we wanted higher prices to really come in and short, which I guess in hindsight is wrong. And I did say for anyone who was looking for longs, you know, just be patient off the open if you really were looking for a long this morning. Let the price action come to you. See how we price and time correct how we handle this gap. And if we could have seen, like this is the beginning of a bull flag type pattern here, or a bullish consolidation after the gap up. So if we could have seen that ADMA really fully catch up to this base, that could have been a catalyst for this market to actually break higher. But sure enough, just when that was beginning to happen, we saw our first Russia headline hit at 950. And then it was just, you know, we broke lows, everything started looking wrong. If this breakdown wasn't the confirmation, this candle right here, the failure to be able to bounce immediately after into equilibrium certainly was, that your longs were definitely out the window today. With that said, you know, I do think that we kind of identified the right things to try to look for. I had very little on my list today, but what was on my list was TJX. Obviously, it was the conference call that ended up ripping this higher, but TJX off that $60 area I was talking about, because of the $3 billion buyback off the earnings report. So that was on the list. SSYS off of its earnings report as a trade through 25. It had to be really early on this and really paying attention to it the second that it opened. But this gave a beautiful momentum move through 25, you know, up to 26.50, $1.50 move there. If anybody was able to actually kind of get that stock, it was a decent amount of risk. My favorite idea turned out to be a total failure, was this Upstart. I really liked the idea of Upstart long versus that, you know, 119 to 120 area that we discussed in the morning meeting. The earnings report in Upstart that it reported about a week ago was phenomenal. It was one of the best earnings reports I feel like I've ever seen. Stock gapped up really big on it. And I remember even saying on the earnings day, man, I would love to be long Upstart versus 120 versus the previous resistance here that's acting as potentially future support, but the gap up is too big. So I wasn't able to get involved here, and then give a day and a half move, got super extended, and then along with market weakness, give a pullback. So sometimes, market weakness drawing down stocks that you like can give you great opportunities to be able to get good stock that you wouldn't be able to otherwise. So that's what I was thinking this morning is, this Upstart had this 3-day pullback. It got back down to 120. Yesterday's low was 119 and change. That this could be an area to really come in and buy off the gap, fill a buy versus yesterday's low. And this one was trying to trade really well off the open. It was a good opening move, decent looking volume on it, decent bullish looking consolidation as the market, was kind of holding in. Remember this candle specifically, this inside 5 and up, it looked like it really wanted to run, and then you got your Russia headline, the market started breaking down, and that was potentially a good trade, but the market itself again was just too weak and really caused that thing to unfortunately fail. And then obviously energy. Energy we discussed actually staying away from today, but it is notable that the XLE is the XLE the only positive sector? Is energy the only positive sector today? What about consumer staples? No, staples are negative too. What about utilities? Utilities are down 1.5%. So I'm not 100% sure, but I wouldn't be surprised if we see that energy was the only positive sector today. It was able to hold in. XLE's up 1% here, but I mentioned just staying away from it because of yesterday's candle. Yesterday's candle is a pretty damning candle. It really is telling us that XLE needs to prove itself. But there's just so many headlines going back and forth right now that are moving oil. Obviously you've got the surface issue of Russia, their big natural gas supplier to Europe. If that gets cut off, energy prices are probably going to go up as a result. But then the flip side of that is you got the potential of a deal with Iran, bringing prices down and increasing supply. And then the Biden administration came out today and said that releasing strategic reserves is not off the table either. So just a lot kind of going on here with energy. It ended up holding in really well here. Just a tight sideways day. So maybe this XLE can actually be back in play tomorrow. If today's high is able to actually break. So that would be one that we can continue to pay attention to. And, that's it. I hope no one got hurt today. I hope people were able to get some shorts on. I know I personally was not aggressive enough with it. I wanted a little bit higher price action to start putting those shorts on this morning. So I was never really able to hedge myself. So, some of my swings held in okay. Some of them were really bad, which, is to be expected with this type of price action. And now we're just in an interesting spot. Let's just take a quick look at our indices here. So they're obviously bearish, they're obviously extended. This 420 is that major kind of support area from the January low. SPYs are still above that. On a closing basis, obviously this is going to be lows here. And the S&P is in a correction. The Qs completely lost that January low. And the Qs are almost in a bear market. I guess we're down 18 to 19%. From our all-time closing high at this point. 20% on a closing basis is what is considered to be a technical bear market. I actually was surprised when I ran those percentage numbers at midday today that it wasn't more. It felt like more to me. I thought that we were actually already would have been in an official bear market by this point. But midday when I ran it, we were down almost 18% from all-time highs, and we traded, I don't exactly know how much, another percentage point or two lower from there. So we're right on the cusp of an official bear market here for the Qs. And the IWM has been in a bear market, but this has actually been relatively strong here for the month of January, though the ascending triangle, which is technically a bearish pattern because it's in a bear trend, broke to the downside, and now the IWM is starting to catch up pretty quickly also to its January lows. Destruction in the FANG stocks is notable. Apple, going back to losing that 170 that I originally spoke about, it's kind of just been a waterfall since then, down to 160 bucks here. But Apple, you can see the relative strength here because whereas the NASDAQ is now well below its January low, Apple is still above it. Microsoft still above it as well, but not by as much, but that still is a signal of some relative strength for Microsoft. Google still above its January low, but this price action since the earnings report has not been good. Amazon still above as well, but then to make up for it, you got like Facebook, right? The Facebook January low at 290, and the stock's at 198 right now, making new absolute lows. Oh, and I forgot to mention Dkng. That was a really one. That one was this Dkng would have exploded today if that market wasn't as weak as it was. This thing was really trying to hold up like an absolute champion, and this was also on our radar this morning. So honestly, I think it's pretty incredible that on a day that's as bearish as today was, we can still find a couple ways to pick our spots to the long side and either make money or not lose money on it. I mean, that's just really, really good stock selection on the very few longs that we had kind of on the radar today. How many of them actually gave moves? It's good stuff. So that is all that I've got for today. So I am happy to look at what you guys got. Alright, I'm going to scroll up into the virtual trading floor here for questions. First thing I believe I see is from Jackie on hotkeys. I was using my hotkeys to place limit orders. I noticed that the orders I noticed that the orders had full share size hidden. Yeah, you don't want that. I didn't have the gray H, that's bizarre, in the order box, but for some reason when I go to modify the order in the order entry box after placing them through the hotkeys, it shows that the size is still hidden. I don't fully understand this, to be honest with you. Do you know how I can fix this? I tried to look into settings, and the only thing I could find is hide all eligible ECN orders boxes unticked. Jackie, I'm going to ask you to email Pat offline on that to take a look at it for you. Really not sure what the situation is there. If it's not refreshing and it's not hidden, it should be visible. Make sure that you can see your orders in the level 2. It's one of the things I like to be able to do. My own orders get highlighted into the level 2. I find that to be pretty helpful for me. But email Pat. Pat can do a deeper dive for you and try to figure out what the issue is. From Sebastian. In a meeting you said that the breakout of an inside day was not an entry. That's not what I said. And my question is then, what is the correct execution for the setup? No, that can still act as your entry. I think what I said, what I always say, so what I probably said here as well, was that it's not an ignition bar. It's not an ignition bar. So you can still take a trade on a break of an inside day and up. I mean, those are in my game plan and my spreadsheet all the time. Almost every day, I have inside day setups in there, and I'm using that inside day high or that inside day low as the entry price for a long or for a short. But they're not breakouts, so it's not technically a breakout. In a breakout, I'll have an ignition bar, and if I have an ignition bar, I can use the low of that bar as my stop loss. In the break of an inside day, it's not technically a breakout, it's just the break of an inside day. So you're not going to... The big difference is on the candle in which an inside day breaks versus and this could be a 5-minute candle or a 15-minute candle, versus the candle in which a breakout actually occurs is going to be volume. So usually on an actual legitimate resistance breakout or support breakdown, that 5 or 15-minute... I mean, look at Tesla today. This was, by the way, a great short. If anybody was paying attention to it, it was just a little bit extended. This is an ignition bar. Tesla break of $800. $800 is a support level for the stock. It's a little bit loose because that one day, the absolute lows there in January broke $800. So it's a little bit loose, but it's a support level, and $800 was basically perfectly holding yesterday. So this is the ignition bar in which the breakdown occurs. It's characterized by very high volume. So you could, and you actually would have gotten chicken out of this, but based on the way I trade, you can use the high of this bar as a stop loss. Whereas if this was just the break of an inside day, the volume's usually not going to be there. And it's the volume that makes the high of this candle important. It's the reason why you can use it as a stop loss. If the inside day is breaking, the volume's not there, you don't have an ignition candle, so you can't use that as a stop loss. So you got to find something else. You could use the low of the day so far, if it's a long, inside and up. Use the low of the day so far. You could use the previous pivot point, but I don't want to just use the ignition bar as my out. So that is what I'm referencing there, Sebastian, and I hope that helps. Yeah, so Josh had mentioned that lows might come in when they actually raise interest rates in March. To me, that's a little bit of a bigger call that I like to look for at this time. I like to take things kind of one day, one step at a time, and analyze the technicals and not make big calls that are like a month out. But Josh does like to do that sometimes. I definitely understand the concept though. Sell the rumor, buy the news. They at a certain point they start to price this stuff in. It was interesting from Pat's research note this morning, where he was quoting one of the more bearish Wall Street analysts that's out there. That research note from that analyst was saying that interest rate hikes are not fully priced into the market yet, especially if that's in conjunction with the big thing that I consistently have been talking about, the potential of slowing growth. So that's going to be something that we really need to pay attention to. But interestingly enough, he did think that Russia was already priced in. So, I mean, what caused today's sell-off? Was it the new Russia headlines, just those increasing tensions? I don't know. I still think that's masking the big story here. Maybe it's adding selling. It's giving people an extra reason to short. But if you just study the statistics, all those events lead to buying opportunities. Markets tend to go up in those war-type situations. I really think, and again, we need the bombs to fly already in some ways. In some ways, I'm just like, I wish they would just invade already. In many other ways, not. But I really think that the issue here is still has to do with interest rates and growth, and is there a potential that this situation here with Russia increases energy prices further, and that slows down growth, particularly in Europe? Sure. I really think that the Russia situation at this point is still just giving sellers another excuse to be able to sell, and that it really still is about inflation, interest rates, and growth, and pricing that stuff in further, and just being in a feedback cycle, right? Gamma is negative, so selling leads to more selling and buying leads to more buying. That's why ranges become so big. This is why understanding market structure, which really comes again from Pat's note, is so important. Where, right now we are in a feedback cycle of selling. We've been in this feedback cycle of selling ever since the key 440 support area broke for the market that I had referenced was so key. So since that's happened, it's just been more selling, which leads to more selling, which leads to more selling. And then eventually that may capitulate, similar to what we saw in January, where you get one of those massive rally back situations. So we'll see how that plays out as well. Scrolling through here. Is a gap down tomorrow considered a breakaway gap from Mike? So technically a breakaway gap is a gap below support or above resistance. So if you consider this pivot low to be support, and it is potential support, or that 420 area broadly, let's scroll out a little bit more and see what else we got going on here around 420, if there's any other real support. Not really actually, maybe from this pivot low. That's such a crazy, I remember trading all these movements. Anyway, so technically if you view this as support and a gap below it, it is a breakaway gap to the downside, but it's a breakaway gap to the downside in an extended market, which means that it technically would have a lower probability of being a gap and go. but it is a very bearish market, and there's a bunch of other factors there that lead to it being a higher probability of a gap and go, like we just discussed. So we'll assess that in the morning as well. I think technically, if we were to gap down tomorrow, what I would be looking for, because of this degree of extension, depends where we gap. But like if we gap to below 420 tomorrow, I probably would be looking at a buyback through 420. But we got to assess that stuff tomorrow in the morning. That's why I prefer. I don't really do a lot of technical research at night. I like to do all my technical research in the morning because I have the gap as the extra piece of information. And the gap is such an important piece of information that the technical research you do the night before can almost be worthless without understanding how the market itself is going to gap. I like to do more fundamental type research at night, catching up on news, catching up on individual companies, whatever it is, and then the technical research in the mornings. From Robert, curious about cash flow strategies at the open. Are they no different than all other strategies, or do you employ a different momentum strategy for cash or for trading around a core? No, for me, for my approach, the strategy stays consistent. It's just you got to know where to stop yourself out on stuff. If I'm trying to have a core position, or I'm trying to add to that core position, or trade around that core position, or I'm buying back stock that I had previously sold at a higher price, which is what I oftentimes do for cash flow, I still got to have stop losses out, right? I still got to know where I'm getting stopped out for this percentage of my position, that percentage of my position, or possibly all of my position. So, yeah. ATI. I know this name's gotten brought up a couple of times recently in our meetings. I still don't know what they do. Allegheny Technologies. Yeah, great looking chart. Stock's barely down even on a day like today after the inside day yesterday, so it's still kind of building out a bullish pattern here. One to keep an eye on. Robert saying that the SPY is now down 12.25%. And that 20% would be around 384. Ooh, boy, another $40. Another $40 before the SPY's in a bear market. I can't believe that the S&P is only down 12%. Doesn't it seem like so much more than that? Especially when you consider that like the real peak. I was saying the real peak for the market happened back in February 2021 when the bubble and the growth stocks imploded. Or exploded. Or imploded. Whatever the right word would be there. From Ricky, for an Oldensmith overthrow, I still giggle at that. Do we look for a setup to enter, or just place a buy stop so it only triggers if we go back through the previous day low? Well, so technically, for a red dog reversal, you're buying back through the previous day's low versus the current day's low as your stop loss. What I really prefer to do is find a way to cheat on that, right? Like I would rather be buying like the hammer capitulation that then causes a short-term reversal, that then causes the stock to get back above yesterday's low, so that I've got really good risk-reward and really good stock, as opposed to just waiting for the stock actually to come back through yesterday's low, where I might not have as good of a risk-reward because there's so much space to today's low. But technically, that's how you would do it. And again, the way that I'm usually trying to do it is find a way to cheat, get in a little earlier than that. How do I predict the direction in the pre-market 4 to 5 a.m.? I have no idea. You mean in general or for tomorrow? I'm assuming you're meaning for tomorrow. For tomorrow, I have no idea how we're going to gap. In general, I don't put too much on the price action between 4 and 5 a.m. There's just not enough volume. But I can see how we're set to potentially gap at that time. So that's the biggest thing that I'm doing. And I will, like if I've got longs and we get a big gap up and it's 4:30 in the morning and I'm awake, I will just use that as an opportunity to start booking some profit. The opposite sometimes too. I mentioned on Monday this week, the only time you really could have gotten stock, right? We had a huge pre-market rally Monday. Right here, which now we're well below that, so it looks like nothing. But we had this huge pre-market rally here on Monday, and if you weren't up doing some buying by 5 a.m., that was when some of these Russia headlines were first coming out. Sorry, this is Tuesday's price action because Monday the market was closed. Monday when the futures opened up is when headlines are first hitting that Russia was invading Ukraine or whatever. When they were putting their peacekeeping troops into the new autonomous regions. The market had a really good rally on that, and it's interesting. This is really interesting, and I think it's notable if we understand the what happened here. Headlines hit that Russia's invading Ukraine. Troops are in. NASDAQ goes down 4%, futures-wise. Then, this is all still Monday with the market being closed. A bunch of data, a bunch of analysts start coming out about how it's a buying opportunity, how war is typically something that's to be bought, the statistics on similar situations, other statistics about how small of an economy Ukraine actually is. And it's like, okay, like they're actually coming out and defending the market off this and saying that this is not a reason to panic. And then by the time the 4 a.m. price action came in, we had already rallied well off those lows. And then by the time it was, 5:40 a.m., we were almost going green. But it's unusual to see that degree of price action that early in the morning. And it can be dangerous to trade because there's really not, even the SPYs are about as liquid as you can get. But even at that time of the day, there's not that much liquidity. So you got to just be careful you don't get caught. Allegheny Technologies Incorporated manufactures and sells specialty materials and components worldwide. Specialty materials. The company operates in two segments: high-performance materials and components, and advanced alloys and solutions. Okay, it's interesting. Wonder why the company is performing so well. Oh yeah, and then yesterday I missed the opportunity to. Was it yesterday? No, it was this morning. Yeah, this morning I was like, I really wish I was awake a little earlier to be able to book a little bit of profit because we gapped up. The highest we were all day today was 4:30 in the morning. So I gotta start waking up earlier. Yeah, Alex, it's unusual though, that degree of that move. But we're in unusual times, so this one it pays to be in front of your seat. All right, gang. Oh, here we got another one from Tommy. Can I check out the SPY at 10:50, 10:55 a.m.? Sure. Okay. Would it be a good short entry on the SPY 5-minute? I'm still learning T3 lessons. I just want to get your perspective on it. So you have a little bit of a descending channel here. The market's very weak. It was very heavy at that time. So you could potentially be looking to short like through lows here versus this last pivot high. I don't love it because we're still having an inside day at that point. There was no real signal to me. Like I said earlier in the meeting, I kind of genuinely thought, especially after this rally came in, that we were going to get an inside day today, and that would have made sense to me because I described yesterday as a spinning top doji, and basically what a spinning top doji represents more than anything else is indecision. So it would make plenty of sense to me if after a indecision candle we had an inside day because the market's still confused and trying to figure things out as we're in more of a bearish situation here, big picture. And I actually would have loved an inside day today because I think it would have given a great short setup for like later this week, for tomorrow. Obviously that didn't happen. So I would just be a little bit cautious on your trade given the time here, time of day, the fact that we're still within yesterday's range, and the fact that you're shorting an extended market to the downside while it is still above yesterday's low. So you have a trade there, but it's not something I would characterize as like an A trade or something that I would get super excited about. You got to really be looking and having conviction. I need to be getting short because World War III is coming or whatever it is, and you got conviction on that idea, and you're looking for any possible setup to really whack some bids and get yourself short. Is that true? I see Viral giving a screenshot. Reminder that tomorrow is Thursday. There have been no green Thursdays in 2022. Wow. I've never been a huge believer in like certain days of the week as being kind of important in certain ways. It's worth noting and it's worth paying attention to, of course. And I do think that there has been something to the fact that Fridays have been weak because people don't want to take risk over the weekend with all the macro stuff that's kind of going on. Yeah. Thanks for the information there, Viral. From Terry Jones, Nat X, very interesting relative strength. Let's take a look. So this looks like it had a catalyst 2 days ago. I'm assuming that catalyst was earnings, really good volume here, and it's given fantastic follow-through. Tends to not be a high-volume stock, which also means that it can be very easy, because it's less liquid for this thing to be going up, especially if there are shorts out there, which there may or may not be shorts. Reminds me a little bit of this KHC move that we had discussed like a day or so in a meeting, that the relative strength just came into this thing off of a catalyst. So I think that you got the same thing here with NatX. The issue with these is that we need to set up now. I'm not coming in and buying a day 4 when it's extended to the upside. We need it to set up, bull flag, something like that, and we can kind of take it from there. And from Pain, Gil. Oh, I did see this. Yeah, I did see this. I briefly looked at this earnings report when Pat was getting that news into the VTF this morning. I took it off my radar for 2 reasons. One, because I thought that the daily chart was sloppy, and 2 is that the average volume. I don't love trading stocks where the average volume is 500,000 shares. Obviously, on an earnings day, it's always going to trade above average volume. So if I was going to trade the stock, I probably would do it today. But I generally like things to be a little bit more liquid than this. So yeah, I briefly looked at the earnings report, but I still find the technicals here to be sloppy. That earnings report, and it's got good relative strength, so that's notable. But this earnings report just has it within this big consolidation that's been sitting in for months. So yeah, all right, gang. I am gonna call it here. We'll see how we gap tomorrow. Crazy times. Have a good night, everybody.